From the HBA podcast studio in New York City, welcome to The Medium Rules. I'm Alan Baldachin. I'm delighted to welcome to the HBA podcast studio today Alex Blum and Peter Lyons, respectively the CEO and CIO of Atomic Capital. Bitcoin in the last 7 days is down 19.28%, Ether 26.3%. How does that impact how you think about the market for digital assets?
It's not like there's 30,000 different companies that are all tanking at the same time. It's really just the price of Bitcoin is tanking and the associated value of other things that are predicated upon the value of Bitcoin being valuable are going down in tandem, usually in a pretty close correlation.
Is there a negative halo effect, or do you think that the market is sophisticated enough to make distinctions?
I think we're still at a very early stage in terms of, we're at the Wright brothers stage still.
Just pausing on the tokenizing somebody's future income stream. I don't know if you guys...
Bowie bonds.
I was going to say, yeah.
Heard of it.
You guys are old enough to know about Bowie bonds.
I'm not, but I've heard of it.
I'm delighted to welcome to the HBA podcast studio today Alex Blum and Peter Lyons, respectively the CEO and CIO of Atomic Capital. Atomic is a startup financial institution dedicated to the emerging security token market, and it is split up into three lines of business: advisory, broker-dealer, and investment bank capital raising. Today, we're going to try and accomplish two things. First, we're going to walk through the basics of security tokens, i.e. what are they, how are they sold, and how are they traded. Second, we're going to use this technological innovation as a launching pad for a more philosophical conversation related to global inequality, disruption, decentralization, and even anarchism. Both Alex and Peter have deep experience in the global nonprofit NGO sector, Alex at the Peace Corps and at the Gates Foundation, and Peter at the World Economic Forum. Now, if this all seems like we're going to be running around the podcast studio today in tinfoil hats, then please keep listening. But before we get into the meat of the security token discussion, I'm going to call a minor audible today in that I'm actually interested to get your guys' take on the current severe pullback in the crypto prices and what you guys think that portends for the broader story of digital assets. So with that, let's get started. Alex and Peter, thanks so much for being on the Medium Rules. Welcome to the podcast studio, and looking forward to what I think will be a really fascinating discussion today.
Great, glad to be here.
Great, thanks. So, as I said, I think I'd like to just take note of what's going on in the crypto market currently. I looked this morning. Bitcoin in the last 7 days is down 19.28%. Ether 26.3%. Bitcoin Cash 32.91%. Stellar, a little less so, 16.47%. And in fact, XRP is only down 6.61%. So that Stellar and XRP are obviously linked. EOS down 24.71%. And Litecoin down 26.86%. So, I mean, there are obviously billions of dollars of market cap there that have been wiped out in the last week. So, continuing volatility after a relatively sort of stable plateau. And here we are with Bitcoin about to dip below $5,000 a coin. Any thoughts, guys? Not so much why it's happening, but how does that impact how you think about the market for digital assets? How does it impact your business? Does it not? What are you talking about, and what are you hearing these days in terms of the market?
Sure. So, I mean, a few things I think it's important to know that there's a really strong correlation between the price of Bitcoin and pretty much any other blockchain-based token or digital asset. And so it's not like there's 30,000 different companies that are all tanking at the same time. It's really just the price of Bitcoin is tanking and the associated value of other things that are predicated upon the value of Bitcoin being valuable are going down in tandem, usually in a pretty close correlation. And it's actually interesting to look at which things are of a direct one-to-one kind of correlation and which things, it's hard to find any with a negative correlation, and those with a, things that go down more than the price of Bitcoin by percentage and things that go down less, and what that says about the relationship between those technologies and the core Bitcoin price value. That being said, I think that, we're really thinking about the securities market, which is a, hundreds of trillions of dollars valued market. And what we're talking about is a few $100 billion, which is relatively insignificant relative to the value of all securities that exist. And so, though it's interesting to watch the price move, I've been in this market for a number of years, and so it's kind of par for the course. And then B, the things that we're selling are securities related to things that already have known values or known prices in the regular world economy. And so it doesn't really matter what the price of like Ethereum token is. If I have a house that's owned, the ownership of it is represented on an Ethereum blockchain, it's still worth what a house is worth.
Right.
And, I think thinking about how to understand your wealth, whether that's in USD value or Bitcoin value as the kind of foundational currency of what things are worth, is an interesting discussion. But as far as like the daily fluctuation, I don't think it really doesn't really impact, or it's not really something I even pay that much attention to.
Okay, that's great. I mean, that's interesting. And I guess maybe too, and Peter, I'll give you a chance to chime in, but that's going to beg the question of what is it that you do think about, which is obviously security tokens. I guess my question for you, Pete, would be, is there a negative halo effect to some extent where people associate the drop in crypto and the drop in coin prices and this severe pullback having a sort of a negative washover effect on blockchain technology, on anything that is expressed on a distributed ledger, zero trust, or do you think that the market is sophisticated enough to make distinctions?
I think the market the different underlying technologies are meant to evolve. And I think if you look at those that are sort of least able to evolve and scale and keep up with the requirements are going to be the ones where investors are perhaps more prone to lose favor more quickly. But I think it just points to a direction where the technology has to go in terms of, transactions per second and scalability and all these kind of things. And I would say that, there's just going to be constant growth and renewal in the space. And, what we have today might not be what we have in a year from now. I think that it's hard to really sort of take a lot of meaning from individual sort of corrections or fluctuations in value. But I would say the overall trend is towards more development in the space. And I think we're still at a very early stage in terms of, we're at the Wright brothers stage still.
Okay. Yeah. So let's take that actually and then segue into what I think is the meat of what I think we want to talk about today, which is sort of explaining the security token market. And let me start with you, Alex. Take a crack, and I know you've done this in media before, and you've done a great job, but I think it's helpful just to set the table for you to talk about, when we talk about a security token, what is a security token and how is it distinct from Ether, Bitcoin, what people might associate with it? Because I think there's a lot of still confusion out there in terms of just defining these categories.
Yeah. Well, I think to start before that, really, it's a question of asking what even is a financial security, which actually the definition of that varies from country to country and jurisdiction to jurisdiction, and there are multiple different forms of securities that exist. I think the things that are unifying across all of those different securities are, one, that it is a definition that is adjudicated by a government entity, and with the ability to remediate any kind of errors or things that have gone outside of that permitted type of behavior, being able for the government to then take some kind of action to enforce whatever rules they have. And then I think B, we're talking about securities are things that have permissions built into them related to who can own and purchase them, and the behavior of the way those things can function that are beyond just what any kind of token that can move around to anybody would typically allow for. So when I think about what a security token is, it's something that allows for both essentially government to take action if something fraudulent or illegal has happened outside of what they're permitting, and then B, allows for essentially permissioned types of transfer capabilities so that not everybody can receive or send every single type of security.
Okay. Pete, take a shot.
I would say it's really about taking what a security is and just adding a sort of wrapper around a security to allow it to be compliance aware, essentially, and to know itself at the security and at the wallet level who it can go to and when, and it can pay out the relevant dividend payments. There's all kinds of mechanisms that today are done by people, that ultimately can be done more efficiently by a smart contract. And that's just simply code that just says that the security will pay out this dividend with this amount of frequency, or the security is subject to a 1-year lockup period. And after that point, it can go to a particular type of investor, or it can, if it's a non-U.S. investor, they can't, the security can't come back in to the country before the lockup period is expired. It's about just sort of managing the regulations and the compliance around existing securities.
So I guess to add to that, what that really requires on a technical level is that any wallet is assigned to the identity of a verified person, which isn't always done on most blockchains or most blockchain wallets, and then also allows for permissioned user types. So there's not just one type of wallet holder, but different people with different layers of permissions, which are very significant things that a lot of blockchains don't possess and are requirements to really make a security token work, and also will be major requirements, I think, of making blockchain adoption in general a useful thing. So it's basically putting adoption and permissioned layer types, permissioned user types onto a blockchain, and then allowing for the flexibility of those things to adopt to different use cases, essentially.
Right. So the way I sort of hear that is you've got the economic layer, and then you've got the compliant identity layer, and then the ability as to how the digital asset or the digital share or digital ownership is traded or tradable, including lockup, including Reg S, which is the non-U.S. buyer with respect to a U.S. security. So all those rules, if you will, are written into a smart contract which lives on the blockchain and then governs all aspects of how that digital asset, that digital share, that digital security behaves. Is that?
Yeah, I think that's
sort of a useful way to think about it.
Yeah.
Ish. Okay.
I think we further confused people.
I'm going for it here. Okay. All right. So we're talking about sort of digital shares or ownership, equity ownership of some form or another, whether rev share, whether dividends, whether liquidation preference, some version of governance, who can own it. And I think on the who can own, you have compliance written in there. So you're going to make sure that the owners have to be accredited investors, maybe,
if that's required, yeah.
Right? Unless you've got a listed security that's publicly tradable. It's going to have KYC and AML if that's part of the jurisdictional layer or the compliance layer. Etc. So I think for listeners thinking about it, you are thinking about, a security that we might normally think of that we've dealt for years and years that just lives on the blockchain and is expressed through a smart contract. Maybe one way to think about it. So it's really, really different than Bitcoin, Ethereum, or a utility token that people maybe have heard of.
Yeah, I think that, when you're talking about Bitcoin or Ethereum, really what you're talking about is a system of wallets and tokens and the way those things interact and communicate with one another, as well as how new tokens are generated. And so what we're talking about are specific instances of those generalized systems in a way that can comply and work with securities law globally.
What are some classic use cases for security tokens?
I think it's so early it's hard to talk about classic. I think maybe a
That's
better
fair.
way, a better way to talk about it is like what's feasible when things are in
what's
such
the low-hanging fruit?
early days.
Yeah.
And so, the things that make sense are, one of the primary kind of value propositions of security tokens right now are to bring liquidity to things that aren't typically liquid and to appeal to a investment base that you otherwise wouldn't be able to appeal to. And so the thing that, I'm seeing is very popular are tokenized LP shares in venture capital funds. So instead of being stuck in a VC fund for 7 to 10 years, you could potentially get out of one after just a few months, depending upon who bought it and where. So that's kind of one of the lowest pieces of hanging fruit. A lot of people talk about real estate, though I think things that don't have an potential for some kind of exponential upside on as far as, I'm going to buy this and I'm going to take all this risk and uncertainty around this technology. I don't understand. It has to be because I think it could go up 100x. So a lot of people talk about real estate as being another kind of prime target. It makes a lot of sense for the person selling real estate and for the person that wants to sell fractionalized shares of some kind of real estate, but I'm not sure who the buyer is for that at this point, when the value of real estate is going to be the value of real estate regardless of if it's on a piece of paper or a blockchain. And so the things I'm seeing that it makes most sense for both sides of the transaction are really LP shares and venture capital funds.
And I would think private equity, same idea. And I know I've heard people talk about, for example, art, things like classic cars, again, asset classes that typically are out of reach for most people and have very low liquidity, which all of a sudden you can fractionalize. And have you guys let me ask you this, at Atomic Capital, what are people, and I want to get into in a little bit more about your company and sort of your origin story, but what kinds of pitches and ideas are you fielding from people, like from the crazy kooky to the down the middle? What conversations are you having?
I mean, I think people approach this space with varying degrees of readiness, in terms of they want to raise capital. They have a project in, various stages of readiness. And so a lot of the conversations are first really based around establishing where they are in their process. And, you do have some projects that are basically, refurbished ICOs. And I think that we try to gear ourselves more towards the higher level of maturity projects, those that have, assets with intrinsic value that are an established business with a strong team. I think that it's much easier ultimately to go to investors and present them something that is backed by a strong team and revenue, right? And the mechanism by which the investors invest in that opportunity, it's almost incidental in many cases, right? So if it's a good opportunity, it's a good opportunity. And if you bring this additional layer of, earlier liquidity, then that's an added bonus. But I think we try to approach this as like these are investments in particular opportunities, and they have very attractive characteristics for investors. And, I think investors are going to be looking for more and more mainstream type investment opportunities. I think one thing that the current market state of crypto says to me is those that are going to participate in the security or the digital security space are going to be more of the traditional investors. It's not going to be the crypto whales. It's not going to be those that have historically speculated on cryptocurrencies. I think it's going through a growing up phase right now, which is very important.
To answer your question a bit about just kind of weird stuff I've seen, talked to a group trying to tokenize Michelangelo sculptures, tokenize, there's a website called masterworks.io that's tokenizing ownership of classic works of art, Picasso, things like that, which is a separate group. I've talked to groups trying to tokenize people's future income and the rights to some of that income, and every kind of real estate thing you can imagine, from equity and single asset real estate to real estate funds to insurance on real estate to real estate debt, anything you can imagine there. Tokenizing equity in companies is pretty straightforward. Tokenizing revenue share with extra benefits of using the token on the platform. Really anything you can imagine, from artwork to regular companies.
That's great. So just pausing on the tokenizing somebody's future income stream. I don't know if you guys...
Bowie bonds.
I was going to say, yeah.
Heard of it.
You guys are old enough to know about Bowie bonds.
I'm not, but I've heard of it.
Yeah, I that was right at the beginning of my career. So David Bowie actually, in effect, syndicated he borrowed against his future income. And it was called Bowie bonds, and it was the first time that happened. So, and then I guess, who was Arian Foster, then kind of sold his future income. And a few actors did that, and it kind of, for a moment, it looked like it would take off, and it never did. But, maybe now this tokenization is the way is the idea that everyone and anyone could, or is this really celebrities, or is it like, in other words, I'm graduating, I've got a Harvard MBA. Presumably there's a market for my future income. Is it as broad as that? With all its philosophical and ethical implications, which would be mind-blowing.
On a technical level, it's as simple as that. I think there's what's technically possible, and then how do you enforce whatever agreement that you've made, and then see who's the market trying to buy it, and then how do you assess risk accurately. Yeah. But I'm sure anybody would like to sell their future income if they could get some cash up front and do something with it now. It's just, how do you actually do that in a way that's meaningful and doesn't tank? You have to find someone because
presumably it's an ETF, right? Presumably it's like a basket up.
It could be.
And all of a sudden you have 1,000 people, right, that you've rolled up like mortgages.
Yeah, I mean, it could work that way.
Yeah.
I think because we're both a tech developer ourselves and also are a group that has to go sell these things and has to go look people in the face and say, you should buy this. I think we look at it a bit different lens. On a technical level,
yes,
we could do anything. We could tokenize this microphone and say the microphone's worth $100, so you're going to get $1, and you can go use that at the grocery store. But we also think about the grocery store has to go along with the scheme, and you have to be able to go collect. And what happens if the microphone breaks? And so it's really not a question of what's technically possible. Technically, you could almost do anything you could possibly imagine, but getting someone to agree with it and adopt it in a way that's meaningful in a global marketplace is a different question.
100%. That's great.
And then the timing of even when that is things that are going to make sense in 10 years, but could happen now, but still don't make sense as far as a business marketplace perspective. It doesn't really matter how interesting it is. It's not going to happen,
That's where the rubber hits the road, because you do hear, all these, crazy ideas with respect to tokenization. But then the other side of it is how many parties actually need to interact to make it work.
Yeah.
And how much friction is there? Yeah. No, that's a great answer. Okay, so you guys have done your security token offering on behalf of XYZ company. I have bought security tokens of that company. Just the nuts and bolts of how I then can trade that, because one of the big promises I think of security tokens is greater liquidity. Tell me why that's the case. Presumably I've still got an unregistered security. Why is it any more liquid than a share of a company I might have bought 10 years ago of an early stage startup, let's say, if I'm tokenizing it?
Sure.
Yeah.
Well, I mean, it just turns out that a lot of what don't require, you can basically fall under private placement exemption rules, which means they don't have to be reporting companies to the SEC. You just file some paperwork and it says, we did this thing, we're making you aware of it. And we've raised money using that exemption is really the class of things that people are targeting as this new liquidity form. And the reason they can be liquid is because there are ways to legally create essentially like stock markets, but they're called ATSs, alternative trading systems, or we could just exchange them between people. It's just that prior to them being in a blockchain-based or tokenized form, it was very difficult to find a marketplace for those things and be an efficient way for that transaction to occur that wasn't more expensive than the thing being transacted in the first place. And because of the immutability and the way to believe in something and what the way to believe that something is what it says it is because it's on a blockchain allows for a lot of the friction and expense involved with doing those kind of transactions to be significantly lower to the point where it makes sense for there to be a marketplace for them.
Okay. Let's talk a little bit about Atomic Capital. Tell me how you guys kind of got started, what the background is, how you guys came together, how your founding team came together, and then I'd like to just talk about what you guys are doing different, how you guys are, innovating with your technology, with your approach. What do you see as the market opportunity? But let's back up. Tell me about Atomic Capital. And I gave the intro as advisory, broker, dealer, investment bank.
So I forget the exact tagline we have on our website, but essentially we call ourselves a digital investment bank. What it really means is we're providing both the technology and the regulatory status of FINRA licensed reps to go out and sell securities and
take a transactional fee.
Exactly, a commission-based fee.
Sure.
So That's kind of what we are broadly. What that means in practice is I think you see some groups that are the technologists that are just making things like what's possible, and then there are the groups that are trying to sell it but don't really understand how any of it interacts with the actual technology or have the ability to assess that. Because we're doing both and actually are legally on the line for doing both of those things, I think we just have kind of a knowledge and level of accountability that you don't find across a lot of other companies. As far as, I guess the other question was just how it kind of arose as a company.
Well, let me. Yes, and maybe I'll ask Pete to talk about that. But are you guys going out and selling these offerings? In other words, do you have presumably a whole kind of
portfolio?
Well, no, I was going to say buyers. You've got presumably the other end of that, which is you're out talking to people who are interested in buying security tokens and who are qualified, and is there a sales force? What does that look like? How do I, it's one thing to create the tokens, and then it's another thing to have the technology, but you've obviously got to have a market if you're an investment bank.
Right. So a number of us on the team have FINRA licenses, Series 7, 63, to legally go out and take a commission on the sale of securities, as well as to structure those securities in the first place. We have a large pool, I think we published online, that represents over $500 billion in AUM between both direct buyers, which are hedge funds, venture capital groups, private equity groups, as well as the ability to syndicate deals out to other broker-dealers and investment banks where they can go sell to their end buyers and share fees on those sales of the commission.
Not unlike a traditional syndicated.
That's what it is.
Yeah.
It's the same exact thing. At the end of the day, it's just money moving between different people. It's just that the ownership of something is represented in a different form. Sure. So, yes,
So all your old models and thinking about how investment banks market deals apply.
Yep. Yeah. It's pretty much the same thing.
Peter, how did you get involved with? Tell me a little bit about Atomic Capital. How long you've been around? How you guys all kind of hooked up and decided you wanted to do this? And
so Atomic Capital as a entity has existed since June of this year. I think that a lot of the work and a lot of the team and a lot of the people, the relationships, the connections have existed long before that. And Alex can talk to a bit about what he was doing before Atomic. But essentially, I was at the World Economic Forum at the time until joining Atomic this past August. And what I kept seeing at the forum was a lot of talk about the need for investment in critical infrastructure, for future-proofing, making the world more resilient, right? But then everyone kept coming back to this point that the way capital markets are currently structured just really does not support the kind of capital formation and the kind of investment that is necessary. So around this time, I really, Alex and I have known each other for a few years, and when I understood what he was trying to accomplish and really like just the magnitude of the problem that digital securities can address, it made me feel like I could spend the rest of my career in an esteemed international organization talking about possible solutions, or actually come over and be part of building them and actually designing the scaffolding for this new way of managing resources and capital that it's absolutely critical for the world to adapt to the changes that are coming. So for me, it was a no-brainer. It was really, do I spend all of my energy and resources and connection talking about something, or put that into actually building it?
Interesting. And so far so good in that regard?
Yeah, I mean it's really exciting, and what I've realized is there's a different perception of time in the space. I mean,
it takes a year, yeah.
It's like dog years, right? So when talking, with Alex, for example, he's been in the space since 2013. And I mentioned that to people that that are familiar with the space, and they're just like, since 2013, like he's like one of the elders, like he's one of the original, like, and it's been 5 years. Yeah. It's like such a, I think it's part of a broader trend, I feel, in that when the pace of change accelerates, I feel that, we start noticing it in these kind of ways. You start seeing, like, from one year to the next, the amount of change, the amount of investment flowing into a space really can be astounding. But then at the same time, there's this sort of reflexive action where, maybe it was too fast, maybe it was too much. And then you see this volatility and this pullback. And I think, the broader crypto space is seeing this, this volatility as a result of all that is flowing in such a short period of time. What have taken a decade or 2 decades, within my lifetime, frankly, and is now happening in a year, 2 years. It's remarkable.
It is amazing how much churn you sort of sense or churning and this incredible sort of creative activity, creative destruction. Obviously, the brains and the energy flowing into blockchain technology, globally, in such a short period of time. You can't have been sort of paying attention even remotely and not notice that. It must be pretty exciting to be a part of. But let me ask you this, Pete. You talked about, you didn't want to think about it and talk about it. You wanted to be a part of this massive change that was going to address some of these things that were going to be coming at us globally. Can you unpack that a little bit, in terms of what you mean? Do you mean challenges of globalism? Do you mean challenges climate related? In other words, what is the realignment that you would say tokenization is in part addresses?
Yeah, so I think today, if you look at the total value of all assets in the world, and you see, what percentage of them are actually securities. I think it's, single digits, maybe just a few percentage points. And so you have capital that is essentially frozen on the sidelines, but the need for capital to do everything from upgrading, municipal infrastructure and public transport. I mean, I live on 14th Street, and witnessing the slow motion, slow moving response to Hurricane Sandy, right? I mean, it's now 6 years later, and they haven't even begun the major construction to basically to put the L back together.
Yeah.
And they're going to have to shut down the L for a year and a half, probably 2 years, to be able to do that. And if you imagine that these broader mega trends are sort of
only accelerating
more Hurricane Sandys in the 2030s, how are we possibly going to adapt? And how do we avoid everything just basically for lack of efficient capital allocation, everything just falling apart?
And tokenization promises to efficiently
free more of the capital that exists in the world. We're not creating something from nothing.
Right.
We're just actually putting value and providing liquidity to the existing assets that are out there, and bring more of that online, because it's trying to solve these big mega trends with just a fraction of the capital that is potentially out there. I mean, it doesn't work.
But and I know this was Pete's point, Alex, but I'm gonna throw this one to you. Is this an idea of, let's say, how municipalities, governments, big infrastructure projects are capitalized? I'm not sure I'm totally getting the connection as to sort of how tokenization would address, let's say, because right now, for these big infrastructure projects, let's say that maybe Pete's thinking about, these global challenges, whether they be the L train that got destroyed by Sandy, or let's say it's even global poverty, which presumably, with somebody from the World Economic Forum, I mean, that's something you maybe have some experience with without without necessarily knowing that, what you focused on there. But how does tokenization in that really, really meta global way, how is that promising to pool capital? It again, just making it easier for people to invest, or is it so inefficient right now as to how capital is pooled for those sorts of things?
I think it speaks to a question of how is basically power and money used today in the world, and why are there only massive companies that are investing into these projects, and what kind of leverage and power does that give them over dictating the way that money functions? And so part of the issue is we've talked to groups that are acquiring national telecom rights, for example. It's a multi-billion-dollar undertaking, and it's also very, very complicated and expensive to even understand what the opportunity is, if it's really what people claim it is, if the technology they intend to use is going to work. It takes months and months just to assess the opportunity, which is millions and millions of dollars by itself. And then if you can give the funds to put together some kind of project like that also, not many people have that money to give. And so it's only really governments, sovereign wealth funds, or very massive private equity groups. And so what you end up seeing is they have a ton of say over the way the terms of that deal are dictated. And somebody in that kind of relationship is not getting exactly what they want, or they're compromising either the way they would go about actually executing the project, or the way they would go about paying for it, or where the money comes from, because of the fact that there's only a few people that can even give the money and can assess the opportunity. So I think the idea is that if you can open up those types of investments to a larger pool of people, where perhaps there is, imagine I'm raising money for a venture capital investment, but I actually have this pool of just retail accredited investors that are willing to give me the money on certain terms and not take that many rights and permissions, because it's more of a retail-based sale. And then at the same time, there's a giant VC fund or SoftBank or something that's trying to dictate terms against me, when all I'm trying to do is make a business that does something in a new way. Suddenly I have a lot more leverage over SoftBank, for example, because I have a different source and I have a different group that's pricing it in a different way and asking for different things. Additionally, the difficulty in distributing those funds over time is much more feasible. So I can actually, use a blockchain-based smart contract to distribute those funds in a way that costs a lot less than keeping extensive files and having an administrator and all this paperwork being executed and trying to keep track of it all. All that stuff can be basically automated. And so the cost of complying with securities laws, distributing those funds out, and getting basically a different pool of people to get involved gives me a lot more power as a business or entity or an individual over just a few basically oligopoly or oligarchy kind of powers that can dictate. Right now today, if somebody said, hey, I have $500 million for you, do you want to take it? I want this, this, and this. Pretty much almost everyone's going to say yes, whatever you want. But there's a certain level of business and even government development that can be done, or have different groups of interest, different interest groups in mind, if they don't have to get the funds on such terms.
Okay, that makes sense to me. Which begs the question for me as to what does governance look like generally with respect to, your garden variety down the middle security token project? Is it one vote per? What does that look like? And or does it look more like sort of a delegated proof of stake, or what is governance? I'm being technical, but what does governance look like in as you guys imagine it for security token projects that you're involved with?
I mean, are you talking about, there's governance happening on a number of different levels, right? There's governance over the way that blockchain behaves, or the rules around, almost meta governance, how you make rules about rules. And there's also governance of a specific security. And so
let's say about the specific securities. Let's stick with security tokens and not necessarily the meta governance of, let's say,
sure,
the underlying blockchain.
Yeah.
Whether it be. But so I come to you, I want to tokenize, instead of going to VCs, I'm going to, let's just say, you guys, I know, did, and we first met, Pete. You said we eat our own dog food. You guys raised money doing a security token offering on your platform. That's how you capitalized Atomic Capital. What is the governance associated with, let's say I had invested. What kind of governance rights would I have had I bought
So every
security
individual Atomic token or Atom token represents one share of common stock in Atomic Capital. Right now there are 12 million shares that have been issued, and 1.2 million shares are digital security version. So every single token you have gives you one voting right, one share of voting rights to the decisions made by the company.
Okay. similar to a Delaware share voting right.
Well, I mean, it is ownership. We are a Delaware C Corp, and if you actually look on Ethereum, our token even says Atomic Capital Inc., Delaware C Corp, Equity, Common, One. Like it says, all those things actually are listed.
Right.
Yep.
And so now extrapolating out to this big infrastructure project, like we're now building the next Hoover Dam, and we're tokenizing that because we're going to pool that capital from everyone in the country rather than, let's say, borrow from the Saudis or SoftBank or whomever. Right. Yep. That's a little bit of maybe the vibe I think that we're getting at here.
Maybe.
What would that governance look like, and how would that maybe be different?
Yeah. Well, so there's governance over the way like funds are distributed, and there's also governance over the way the project's executed or how vendors are selected. And so I think some of those things you don't want a million people making choices. So, if we were advising a company doing something like that, we would advise them to sell some type of security that gave proxy voting rights probably to the primary management company, or maybe only voting rights over certain types of very specific decisions, because part of the power of having like private companies and, small groups of teams managing things is they can make decisions quickly and things can get done quickly. And I don't want a 7-year debate over if we should use vendor A or vendor B. And so, whatever rules or rights make sense for that specific instance of a security, we can write into a blockchain. But it's really the same way governance is decided for any regular company. We can just write that into code and enforce it that way.
It could be a bond. It could be preferred share. I mean, I think all of these issues have existed in finance for hundreds of years, right? We're not reinventing governance necessarily, but, in some cases for a particular project, you might just want you want to issue a bond, right? And maybe that's exactly like what investors have an appetite for. In some cases, you can create different types of securities. You could do like a revenue share or, some kind of hybrid thing. But ultimately, there has to be appetite from investors and understanding of what exactly they're getting.
Do you guys find you have to do a lot of educating
yes.
these days? Yeah. Like right now.
I feel this is part of what we're doing now.
Yeah.
I think absolutely. And I think a lot of the time the case is that groups think that they're ready to do this and actually are nowhere near really having considered the different, factors that would both make this work on a technical level, and also you have to understand, like, you can actually go sell it to somebody. Like, it's not a theoretical exercise. Like, we have to go find somebody to sell it, or it's a giant waste of our time and money also. And so, there's a lot of work required around that stuff.
How do you think and maybe this is a nice sort of way to come to an end of the conversation. How do you guys see your particular part of the space evolving? In other words, do you anticipate there are a number of security token platforms out there?
Very few that also are licensed with FINRA that could do that part as well. There's either usually technology companies or there's companies that will sell.
Okay. Do you anticipate sort of some of the big boys coming in? Have you seen any sign of, let's say,
I spoke to a group from Goldman Sachs yesterday about it.
Okay. So they're very interested or interested. Are they doing it now? In other words, are they selling security tokens in this way now? Do you happen to know?
I don't think any of them have.
I have not heard
done that. We talked to investment banks that are. A lot of them are, looking for the right one, but specifically I'm thinking of a specific company where the founders are from Goldman Sachs and have used Goldman Sachs resources to build basically this entire ecosystem supported by their existing resources.
Okay.
Where you're talking about regular stocks and regular investments alongside tokenized securities all in one place where they can trade interoperably.
Okay.
And they have, have their own banking arm and they have their own custody that's insured, like all that stuff packaged up in one place, essentially.
Does that keep you up at night, or do you view that as it
keeps me up. That's why we're working so hard.
Yeah.
But I think there's, but like if you look at the regular securities market today, like Goldman Sachs has all that power and they still have partners and they still syndicate deals. And so it's not like, I don't think there's going to be one group that runs the entire world's global economy. And so I think it's both a place to understand that like this is a serious thing and there's serious players coming to this market and you better have something to offer beyond just like some cool ideas, and B, that it's a validated market, that there's a real reason to be creating it, and that there'll be increasing supplies of money and interest and people coming into it. And I kind of think of it like we were trying to speak to you at the beginning of this conversation as potentially like the quote-unquote killer app of a blockchain, in that it forces people to put actual verified identity and actual verified things of value onto a blockchain in a way that can scale enough, so much that it actually becomes useful. Because like all the technology in the world, I always say like Facebook, like if there was only 3 users of Facebook, it doesn't really work. It doesn't really matter. And so a lot of it's just user adoption, regardless of the idea or how cool something is. Like it actually only starts to work when there is a network using it. And so groups like that just, and security tokens in general, is the way that that's going to come to be, I believe.
What are your what do you guys sort of think you've got to run fastest with respect to, in terms of, is it technology, is it team, is it reliable book of buyers and investors, is it educating and adoption, to sort of stay ahead and be successful? What are the key drivers for you?
Well, I think you're talking about these like individual, like companies trying to create custody, and then other companies trying to create secondary markets, and other companies primary issuance. Like I think all of those specific things are multi-billion-dollar businesses. And so to me, it's more just about executing on what things become executable for us. So like I don't have the capacity to raise $100 billion by myself today. So I don't think that we're going to put our flag in the ground in that place. But, just execution and showing that we can do different aspects of that ecosystem, and in a way that complies with the law, is a pretty big deal. A lot of that has to do with also having the correct legal licensing to provide those services. Sure. And so, to me, it's just having putting things together and just showing that and everyone else. I think you'll find that if you actually dig down into a lot of this stuff, a lot of groups are talking about it, or they're claiming they can do things they're not legally allowed to do, and we're just actually doing the thing instead of talking about it too much. It's really more about, our kind of biggest challenge is just focusing where we put our time, more so than it is like trying to find opportunity right now.
Okay.
I would add, I think education is a really critical component for investors in particular. I think you have to sort of disaggregate, in the mind of investors, this sense of like crypto is one thing, and that digital securities are some kind of like subset of like the crypto world. And I think it's really a matter of like developing a level of sophistication around like, well, actually, what we're talking about is multi-layered, and there's the technology that underlies how some of these things can happen, and then there's the applications of that particular technology. And Bitcoin and Ethereum and Stellar are all particular instances or applications of the technology. And I think for investors to understand that what this is actually something that they already are familiar with, I think that's going to be really important for bringing for the gravity to really bring and attract the amount of capital that's right now sort of looking at other things, right? So I think you have to really help people understand that they actually already know this stuff, right? And it's not just about the technology. You don't really need to know that your broker dealer has a voice over IP connection, or the particular type of like internet speed that they need to be able to like place an order for you, unless you're like a high frequency trader. So it's like we have to sort of extract the discussion and sort of take it up at a higher level, and just hey, this is actually understood. We're not reinventing the wheel here.
Okay. What does, and I asked this question and to finish off, what sort of keeps you up at night the most in terms of your business? What is the thing that you worry about the most? What's
I think to me, the thing is just all the kind of noise and BS and hype and people doing things that are either illegal or just don't make sense and just marketing it really well. Whereas we go through all the hoops and hurdles of doing these things correctly. And so I don't know if it keeps me up at night so much as just like frustrates me. And actually when like the SEC puts out actions against fraudulent groups, or the news comes out that, it turns out like the law applies to things, that actually is just further validation of what we're doing, and actually kind of is a nice thing, because we have a lot of those boxes checked. So it's really just like how to be, just continue to move forward while, I guess, to answer your question, I think it's just making sure that at some point that, people can, there's some point where people can have to differ between what's just hype and what's the real deal.
Okay. What do you do about custody? Do you guys?
That's a good question. I think there are a number of groups that either claim they provide custody, or they claim they provide insurance on custody, or they're qualified custodians. And if you really look digging down into the SEC definition of things and what people consider insurance to be, it doesn't really exist. And so right now we provide, like, people can keep custody themselves of securities.
Like a nano S or something like that.
Something like that, yeah. Exactly. And
do you have do you have your own proprietary solution, or do you have
I've developed the technology for it, but I think if you can't provide, the problem is there's not reasonable insurance. I've talked to AIG, I've talked to a lot of groups that they don't understand how to assess the risk of it, they don't understand the technology, and so they won't provide insurance at a rate that's anywhere near reasonable. So it doesn't really exist. And I can't insure billions of dollars of digital assets, and so I can't do it by myself. But there are companies out there making money providing qualified custodian services, when by the definition of any institution, there's no such thing exists today. And if it's not insured, it's not really very meaningful. And so, in fact, I don't think the tech part of it is really that complicated. I think companies make a business out of making it sound complicated, but no institution would ever engage in it. And so it doesn't really exist.
Okay. Well, guys, thank you. Thanks so much. This has been extremely informational, and as I anticipated, would be very interesting. And I think we covered a lot of ground. Would really look forward to watching the market, seeing you guys, how you guys do, and having you back.
Great. Thanks.
Thanks, guys.
That's a wrap on this episode of The Medium Rules with Alan Baldachin. For more information, go to our website at www.hballp.com. And you can also follow us on Instagram, Twitter, and Facebook. And don't forget to rate us on Apple Podcasts.